Hi, and welcome to another great video here at Street Smart Options. It's Jim Bunker and Jonathan Sherman. Folks, one of the things we talk about in Street Smart Options is our profit cycle trading program. And what we do with profit cycle trading is we have the ability to take profit over a 3 to 12 week cycle. And Jonathan really has the ability to explain this in such a way that people understand it. Many times we see people that are much too caught up with a million different techniques, iron condors and butterflies, and all kinds of very unique spreads and trades and things that really confuses a lot of beginners. So we really focus on the basics here at Street Smart Options. So Jonathan's going to be talking about today an option trading strategy that is really part of our bread and butter trades. Because we really believe that if you keep it simple, stupid, if you really keep it simple, that you have the ability to really control more when you're doing your trades. So this is a Microsoft bull call spread, and it's really one of the bread and butter trades that we do here at Street Smart Options. So with that, I'll turn it over to you, Jonathan.
Yeah, so thanks, Jim. We're looking here now at the chart of the S&P 500. Today is January 27th. We're recording this on a Sunday, and so the market's closed. And the S&P and the overall market has, it rallied from the Trump election all the way into the end of 2018. And then we saw a rare holiday sell-off in the market, around the Christmas holiday, where the market fell 20% and hit a bottom in the end of December, and has recovered now to a level of 2650 on the S&P 500, trading above its 10-week moving average, but sitting below its 40-week moving average or its 200-day moving average. And so we're in this area now where the market actually is short-term, a little bit overbought on the cycles, but bouncing off this big sell-off. So we're not overly bullish at this point, but we're not overly bearish either. And the reason, I'd be a little more bearish on the market right this instant if it weren't for the fact that, changing here to the daily graph on the S&P 500, the market tried to fail here. It was down 400 points on the Dow Industrials after this big rally, but then went nowhere, and then decided to turn around and get some more buying going in the end of January here. Now, also you have to keep in mind that the federal government has been shut down. So this market is rallying in the face of all that, federal shutdown bad news, right? And so once that bad news goes away, this market could go quite a bit higher on a single day move once the federal government opens up again. So we don't really want to be short into this news event that's going to come eventually, and the market is saying, don't be short, look how strong I am. So even though we're a little bit overbought on the cycle indicator, I wouldn't want to be short right now in the market, but I'm not overly bullish either, because we have the 200-day looming here, and we have a whole bunch of overhead resistance from October, November, December, the October-November timing trading time frame here, which coincides, by the way, with the 200-day moving average. So we'll see where the market's going to go in the intermediate term, like the 3-4 month term. I wouldn't be surprised if it rolls over, but I don't know. I can't forecast that far. But what I can say is right now, right this instant, I'm relatively bullish, but not overly so. To take advantage of that, we're going to take advantage of the market volatility and sell some of that volatility. So if we look at the VIX now, you could see, on the sell-off in December, the VIX spiked to 36 area. And so the volatility really blossomed. Then, when volatility goes up, so do option prices. That segment of the option price, which is related to volatility and time premium, really shoots up. And it's relaxed a little bit now, which the VIX is trading at around 17, 18. And but it's a good area. There's still a lot of opportunity if the market continues to go sideways or trade up. There's still a lot of volatility premium left in the market that we could take advantage of. So what we did is, okay, so what stock are we going to look at? Are we going to trade the index? Are we going to trade maybe a bull call spread on the index to take advantage of that option premium and our mild bullishness? Or are we going to trade a stock? Well, it'd be better to trade a stock that is outperforming the S&P 500, right? Because there, then we're going to find a stock that maybe, might do a little bit better than the S&P 500 in case the S&P 500 just goes sideways or down a little bit. Maybe the stock will hold up. So I uncovered Microsoft, and Microsoft, this is the daily chart, is trading above the 40-week moving average and also its 50-week moving average. I'm sorry, its 10-week moving average, 50-day moving average. This is the 50-day and the 200-day. So this is the 200-day moving average and the 50-day moving average. And if you notice, the overall market, if we go back to the S&P here, you can see that in the overall market, the 50-day moving average is actually trading under the 200-day moving average, right? That's called like a bear cross or death cross in the major indices, right? But Microsoft, the 50-day is actually trading above the 200-day. So it's still in this rally phase, or really you're in this choppy sideways phase, but it's a good place to take advantage of the volatility premium in Microsoft. So we're going to go take a look at doing a bull call spread, and I'm going to jump here to the Interactive Brokers, and this is the Interactive Brokers. This is the options ladder for Microsoft calls, and we're looking at the February 22nd expiration here. There's 26 days to expiration. And, if you look at that chart again, get an idea of what the level is that we should trade. I'm thinking, we're going to do a deep in the money bull call spread, take advantage of that volatility premium, and we're going to look at doing the 95-100 level here. So if the market holds up or even goes down quite a bit, we're talking 7 points in Microsoft, that'd be quite a fall in the market. We're still going to make a profit as long as this stock, trades above 100 or maybe a little bit below 100. And so that's why we're interested in this. So we're looking at the 95 to the 100 strike, and let's see, where's the 100 strike on this? There's the 100 strike. So let's expand this out a little bit so we can see the 100 strike. There we are. And so what we're going to do is, in a bull call spread, is we're going to buy the 100 strike, right? And then, the 95 strike, the low strike, and we're going to sell the 100. So let's pull this down again so we can see the 100. There we are. And we're going to sell the 100. Now, we're not going to do the bid and ask. I'm putting in this order on the bid and ask here. But what we're going to try to do is we're going to try to hit the midpoint, right? So we're going to click this midpoint area here. And the midpoint is what we're going to calculate our potential profit and loss on. So we're going to go now to our website, actually, streetsmartoptions.com, and we're going to look at our bull call spread options calculator. And I already put the numbers in. So on a $500,000 portfolio, if we, max position size, want to risk a maximum 2% of our portfolio on this. So we're going to go with the 100 high strike, the 95 low strike, and then the midpoint of the spreads on those options is 8.1 on the high strike option, which would be the 100 option, and 12.65 on the low strike option. So this gives us a potential max loss, which is our initial outlay for this thing, of 95.55. And our stop loss, we're going to say, okay, if things don't go our way, we don't want to hold this till we lose that entire 95.55. We're going to put a 20% stop loss on this. So our stop loss is, if it goes, down and the stock starts trading around 100 or lower, we're going to get out if we're down about $1,900. So our max gain on this in 1 month's time is about 9.9%, but we like to look at the annualized gain, the max annualized gain, and the max annualized gain on this trade is 144%, which is pretty darn good for a kind of a low risk Microsoft trade where we're just, basically taking some money out of the market by letting time premium decay. So we like this trade right here, and that's why we're talking about it in this in this video. And the thing is, this is the kind of trade. It's kind of a low risk trade, which you can find these things all the time in the market. And here's a good way. You're making 144% annualized on a trade. All right, Jim, I wanted to bring it back to you.
All right, folks. So thank you for that, Jonathan. I appreciate it. As I said earlier, folks, one of the things you want to be looking at is if you're not a member of our Facebook group, you're going to be missing out on videos like this. So you can very easily find us at our Facebook group. And that is all you need to do is go to Facebook and literally put in the letters SSO. And that is our quick link for our Street Smart Options group. That group can also be located by typing in www.facebook.com/groups/Street Smart Options group. And again, folks, if you're not on our YouTube page, you can find us on YouTube at Street Smart Options. And you should really be there because that's where you're going to be able to subscribe and hit that bell icon so that you can get all the notifications for the new videos that we have, because this is literally free training that we're putting out there. Now, obviously, we have a program over at streetsmartoptions.com, and you should have noticed in that video, we were using a piece of proprietary tech that we have built for our company. That's Jonathan's options trading and stock options trading calculator. And what the calculator does is it shows you, where you've got liability and where you have an opportunity. So it really puts you in a good position to understand, your exposure on a trade, and also shows you your potential for profit and loss. So that is something you can have a 100% free. We're currently offering a 1-year contract for that for a free calculator, but you got to come to one of our webinars and actually sit through the webinar and listen to what we're offering right now. So if you'd like information about when that next webinar is going to take place, all you need to do is email me at support@streetsmartoptions.com. Feel free to come over to streetsmartoptions.com and look at everything that we have to offer there. But we do have a special right now that we're running, and if you'd like to contact us there or contact us through the Street Smart Options group on Facebook, I'd be happy to chat with you. Thanks, and have a great day.